second. All right. Let's go ahead and get this call rolling. You know, I'm super happy and blessed to be here today with you guys. You know, I'm rolling in some profits right now with SPX. My take profit was right here. I took these earlier today, so unfortunately we weren't here together. But what's really cool is that the reason that we're doing these technical Tuesdays is because I want you guys to see what I'm doing after I take a trade. Like, I want you guys to see how I manage a trade, how I go break even, how to handle yourself during a trade. Usually, for the most part, I've noticed that most people and every single one of you already know how to get entries. It's what happens after the execution that really gets people. Because how do you manage your trades? How do you take profit? How do you partial out? So we're going to learn all of that today, okay? So we're going to walk through this from the top, okay? And I'm going to take some of this stuff off because it's a lot of stuff. Okay, so give me just one sec. Just needs to look a lot cleaner than this. Otherwise, it bothers me. Okay, sorry about that. Okay, so on a weekly perspective, we're looking for longs at a previous weekly low. We achieved that previous weekly low yesterday. Okay, then today we come into this previous area of accumulation. I want you guys to see this a lot better. So give me 1 second. Let me take off my positions off. There we go. Okay. So 50% and below, what do we look for? Internal liquidity. This came in the form of a previous weekly low. Okay. This came in the form of a previous weekly low. So that's pretty strong liquidity for me. Okay. So then we come into the daily time frame. Okay. And I'm looking for more upside personally. We don't have to get that today, but I would love to see more upside liquidity. Okay. Then we have on the 4 hour here, we have this whole range. Remember, this white line right here, that's 50% mark. That's the 50% mark. So given our 50% mark, I was looking 50% and below after we swept internal liquidity for that unmitigated area. Okay, so that right there is really what got my attention, is that candle there. And then, of course, we have these equal highs up here with this previous area of distribution. So nice internal liquidity. Then you have the 1 hour. Okay, the 1 hour is showing us a previous area of accumulation. Now, the reason I don't have this on my chart is because I don't like to have a lot of things on my chart. But this imbalance here that swept that previous weekly low, it gets my attention. Okay. Right there. All right. So one thing I'll tell you guys is that there was mad divergence between the indices today. Okay. So one way that I'm going to manage this is for the asset that failed to take out the lows, for the asset that failed to go any lower, I'm going to hold. For the asset that clearly had the strength to move a lot lower, I'm going to leave. Now, one thing I'm not going to do though is close a winning trade. Okay, the reason that I won't do that is because you have to, before you close any trade that you feel like, oh, this thing's gonna turn around, it's coming out of this previous area of distribution, it's gonna turn around and go against me. Now look, I'm not saying that this thing can't go against me. It definitely can. But before I close and invalidate everything, I like to walk myself up. Okay, so now higher time frame is in my favor. The 1 hour is probably the only time frame right now that is not in my favor. Okay, the only time frame. So then we step down one more time. 15-minute. Okay, we see that we came into this previous area of distribution. We took out that high. And we have this insufficiency right here. So now let's take this off. Okay, we have this insufficiency here. So that, for me, that holds the line of bullishness as of right now. This low and that insufficiency hold the bullishness for me. Okay, because again, the manipulation to the upside was strong enough that it created an insufficiency. So I'm going to be keeping an eye on that insufficiency and in this previous area of accumulation here. Okay, so personally, I'm going to be pushing this a little bit higher just in case we do come down. Want to secure some profits there. Okay, now I don't care if I'm way in profit. Okay, and this starts coming down. You have to understand, the way that I enter trades is while the price action is moving downwards, I buy. While price action is moving upwards, I sell. It does not make sense for price action to be moving lower and for you to sell. It's 100% contradiction from what you've trained yourself to do, right? Buy low, sell high. Not sell low and buy high, right? Don't sell while the market is shorting off, right? When the market is shorting off, you want to be on the buy side. You want to catch the buy side. So what does the retracement mean to me? It's coming out of this previous area of accumulation. Now let's look at the way that you would invalidate this. Okay, so we hear a lot about back and forth and switching your bias. Now let's look at this whole thing. If we were bearish on the 1 hour and we were to start distributing from here, and this was our whole range, let's see if everything meets. Did we sweep major liquidity to the upside? Not yet. We swept Asian highs. That's about it. Okay. From that high to that low, let me see my Fibonacci. From that high to that low, okay, is there internal liquidity? Well, you have a high right here. That could be signaled as internal liquidity. So you have some there. You have some liquidity, but no higher time frame liquidity. Now, do we have a shift in market structure? Yeah, we definitely do. Did it hit a major level of support or resistance? No. As of right now, the only major level of support that it hit was that previous weekly low after the displacement. Okay, so you can assume that the displacement that you're looking at, the bearish displacement, is actually a manipulation to come down to the level of support. Okay, because then we left all these upside targets, objectives to the upside untapped. Okay, so now we can assume that this was the manipulation to get to the level, a strong level of support, to continue to ride this to the upside. Okay, now again, this can reverse, this can all go 100% against me. That's okay. Like, I will observe and I will learn from it. What I will not do is intervene with my progress. Write that down. What I will not do is intervene with my progress. Because if you were to mess around with this trade, close it early because it starts reversing, just like price action always does, retracements, you will intervene with what will be your process. Okay, you're double crossing yourself by closing trades out early, seeing a small retracement and going break even, seeing a small retracement and taking profit and taking partials, major partials. I can't tell you how many times I have students, well, I guess not direct students, but I've seen individuals take a trade and then in every single pullback against them, they close the trade. On every single pullback against them, they close some of the trade. By the time they hit this, whatever this is, I think it's like a 1 to 4. 1 to 4. By the time they get to that 1 to 4, the trade is riding like a quarter of its original volume. So you're only getting a quarter of the profits, if that. I'm not saying hold all your trades, don't fucking take partials or anything like that. No. Take partials, follow your plan, of course, but follow your plan. If your plan is take partials every retracement, I'm telling you, you should probably work on and revise that trading plan. I'm telling you that right now, as kindly and respectfully as possible, telling you that right now. If you do not learn to hang on to your winners, you will not be able to afford your losers. That's why most people are over here breaking even or in drawdown most of the time, because they're not hanging on to their winners long enough. Okay. Now, of course, my overall target is way higher. Yesterday, I got stopped out. I was in profit like almost 1.5%, but I got stopped out in the end because of trade management. It didn't, it didn't fit my or meet my criteria to go break even. And so today, I'm having very short targets where I can secure profits, major profits for today, and recover the mistake from yesterday, which wasn't much of a mistake, but getting stopped out, right? So the cost of this current investment is I risked $750 here. I risked $300 here. So we're looking at about $1,000 so far. Okay. And yesterday I lost about $750. So you're looking at about $1,750 that I lost, $1,800 that I lost overall in the past 24 hours. Okay. Or that I not lost, but I invested. That's the word that I want you guys to get used to now. That's how much I invested into this trade. I know you guys are seeing 2,600, but I've invested almost 1,800 into this trade. It only looks like 750 because that's how much is behind this trade. But we're not seeing the blind risk, right? There's a blind risk to everything that we do. Well, the blind risk here is yesterday's loss, which wasn't a loss at all if you understand this. Yesterday's loss is today's investment. Yesterday's loss is today's investment. Okay? So, I'm going to allow price action to do its thing. Looking at NASDAQ for a little bit more longs, but overall for the week, guys, I'm gonna take the trades off now that you guys have seen them and seen the ones that we're looking at. Okay, I am personally looking for price action to start shorting off a little bit more. We are in premium price action. We bought from discount, okay, but we are in premium. Now, one thing I'll tell you guys right here, since this is my now 15-minute imbalance, but this is an unmitigated order block, I'll show you guys here. I personally won't go break even because my stop loss would be below this low, okay? But overall, again, I am looking for more lows on NASDAQ. I want to see price action really short off. I know I'm in some longs, so it's kind of contradicting, but I want you guys to see what I see on DXY, okay? So DXY has been shorting off. Check this out. We took out internal liquidity over here. We took out internal liquidity over here. I'm looking for lows. I looked at this previous area of accumulation as a objective. Okay, wow. Passion's using an objective as a order block as an objective. Yes, not only highs and lows, but also unmitigated areas that have met certain criteria, like swept previous lows and accumulated below the lows. Like those areas interest me even when we're bearish. Okay, as a target, okay, that it seemed like a logical area. Now I'm looking at the triple lows still. I am looking for lower price action. I do believe that we can get that. But being where we're at, I also wouldn't be surprised if throughout this range from this high to this low, we start getting a slight retracement back into this imbalance. So there's a couple of things that can take place. Personally looking at some DXY more longs into this area. We'll see if that happens. If not, indices are going to keep flying. But with this bias, kind of intermediate long bias, okay? Even though long term, you want to go short. Okay, long term, you want to be short. Okay, intermediate or short term, I want to see if we get that retracement or reaction out of this previous daily opening gap. into this area here after we took out these previous weekly lows, or in last month's low, by the way, June's low, or yeah, June's low. Okay. There, you guys can see it a lot better there on the monthly. So I want to see if we get some long reactions. That would give us a little bit of these short reactions across the board on indices. Now, it would make sense to go short, being that we're in premium. Okay. I would like to see if we get deeper into premium, but just know that we don't on NASDAQ. Since we swept that previous daily high, we don't have to go any higher before we start seeing these shorts. So for me personally, on NASDAQ, I will personally, because they have already taken the previous daily high, I'm actually going to look to move my stop loss right here. Where is it? Above that 15-minute imbalance. Right below that 15-minute imbalance. Okay, if we are going to respect bullish order flow, this holds the line of bullishness for me, given the divergence that NASDAQ has with all the other indices. So now I officially, because my entry was based off the 15-minute here, 15-minute and 4-hour, remember that 4-hour candle? Right here, 4-hour unmitigated candle. That's that that first orange line there. Let me delete the other one. It's that first orange line there, right above the blue imbalance. Okay. And then on the 15-minute, my entry was based off, and my stop loss was based off the imbalance here in this area. So that's how this trade looks like. Now, following order flow, stop loss below the low of the imbalance. That's where I'm going to keep it. That's just following my order flow and given divergence. Usually I'll just leave it break even, but given the divergence, I am going to be moving it up there into profit. Now let's go look at SPX. SPX does not have those insufficiencies. Therefore, I'm only at break even on SPX, and personally, I'm not going to be closing that trade until it hits take profit or stop loss. Okay, that's how I manage my trades. It's a matter of insufficiencies. If I got my, so on SPX, I got my entry based off the 1 hour. I'm going to be looking for a 1 hour 15-minute imbalance to walk my my stop loss up. If I don't get that, then I just don't move it, and that's just as simple as it is. Okay, now I'm gonna walk you guys through this SPX trade, and it's going to be highly advanced what I'm about to show you guys in terms of liquidity. If there's anything that I've learned in 2023 that I will tell you guys that you have to learn about, is intraday liquidity. Okay, and I'm gonna show you guys here a full breakdown. So same thing, right? Same thing. It looks very similar to NASDAQ. Previous weekly low as internal liquidity. Okay, give me 1 sec. Let me turn all this stuff off. Okay, internal liquidity. So now within the range, we came down to discount price action and this breaker right here on the left. Okay, beautiful price action delivery. Then you have the 4 hour. This is where the intraday liquidity begins. Because I was looking for some more longs, okay, I'm looking, by the time it's around 10 a.m., 9 to 10 a.m., I'm looking at 4 hour sweeps. Okay, and so I was looking at the fact that where was it? 4 hour. Let's go to the 4 hour here. 4 hour here. Okay. Let's go to NASDAQ. Dow. Okay. 4 hours. Okay. Look at the 4 hours across the board. Okay. On SPX, we had taken out Asian lows. On Dow, we had taken out Asian lows. that now becomes my level of support. That low now becomes my level of support, meaning that I'm not going to look any lower than that low. Okay? Any lower than this low. NASDAQ didn't come down till after the open. Okay? And then NASDAQ fail after sweeping the previous the Asian low, fails to come any lower to this unmitigated area and kind of leaves these equal lows right there. That's what gives me the confirmation that NASDAQ is going to continue moving lower versus our other assets who are moving higher, okay, after taking out the lows. So now NASDAQ fails to take out the lows. Dow Jones take out the low here at 2 a.m. NASDAQ comes for the lows at 6 a.m. Okay. So now let's go to the 1 hour. And you guys can kind of see this a little bit better. Okay, so now on the 1 hour, you guys can see that at 10 a.m., which is the time that I wait for my trades. Funny thing, right? Coincidence? I don't think so, right? But this is why I wait for 10 a.m. After 10 a.m. comes, and I usually wait for the previous 4-hour candle to get taken out. I wait for the previous 4-hour candle to get taken out. Okay? That's my intraday liquidity level. And I'm not going to look, I'm going to look for the previous 4-hour candle that got respect or that took out liquidity to be respected. Okay? So now we got the low. But between the low and the high, we need what? Between the low and the high, we need liquidity. And that's where that candle comes in. That's how I find these zones. That's how I find precision. That's how I increase my precision. I find these zones because I'm dissecting price like this, to this extent. Okay? Is that an imbalance? Nah, that's not an imbalance. Anyways. All right, so then we go to the 1 hour. 1 hour is bullish, right? We go to 9 a.m., 9 to 10 a.m. You guys see 9 a.m.'s low, which is that 4-hour low as well. Okay, and then that 9 a.m. high. NASDAQ is really close to our break even. And if NASDAQ goes break even, the divergence between these two, I'll just go close all of it out and then call it good for the day. So if NASDAQ hits us out, then we'll just close it all out and then call it good for the day because of the divergence. But again, letting price action do its thing, allowing price action to breathe was the most important part. I usually like to give price action about an hour to 2 hours before I decide whether I need to collapse it or not. Okay? Give price action that much room, believe it or not, before I decide whether I need to collapse price action or not. So we entered right at like the turn of the 10 hours. So it's been an hour and 15 minutes, right? So not enough time, but enough, I guess an hour to 2 hours, enough time to tell you whether your trade's a good one or not. Of course, you don't want to label them negatively or positively. These things are all just remain unattached from negative or positive labeling, okay? Because at the end of the day, like, this thing can go as low as down here and then pop off. NASDAQ as well, this thing can go as low as down here and then pop off, but the level of exposure is not something that I want to deal with, right? And so I manage my trades like this: 1 or 2 hours, give them enough room. If price action's not leaving my area, I either go break even or I trail my stop loss to the point where it's gonna hit it in some scalable profit that I could utilize tomorrow, right? So you can see that here. Obviously NASDAQ is gonna go lower, so we're gonna just let that do its thing. SPX doing the same thing. This is honestly how I manage my trades. I just kind of overview them. I let them be on the 15-minute. If you ever catch a 1 minute entry and you remain on the 1 minute, you're gonna get very emotional. This trade right here was mainly based off the 1 hour, just like this right here. I guess the 15-minute and the 1 hour. Just like this right here, as you guys see it right there. That's how I took this trade, like this. Stop loss below the low that created that imbalance, and then boom. That's it. That's how I took this trade. This is how I view it. This is it. I mean, I'm not making it overcomplicated. I'm making it very simple for you guys to be able to find these trades, even on a bigger time frame. Now, you guys may have different management, like trade management plans. That's awesome. I highly encourage you to always work on that. But that's really how simple it can be. It doesn't have to be more complicated than just a simple 1 hour trade. 15-minute setup. You don't need a babysit price too close to know when it's going to be a winning trade or a losing trade. That's all I would tell you guys. But with that, guys, let me know if you guys have any questions, if you guys have any comments, observations, or if you guys would like me to look at any other assets. This is a really good time to do so. Also, by the way, thank you for everyone on the giveaway yesterday. We got a tremendous amount of entries. If you guys don't know what giveaway I'm talking about, on my Instagram, I'm doing a giveaway. We're giving out 220K accounts, okay? 220K accounts that you guys can take your challenge on from my Forex funds. I made the entries super easy. Super easy. If somebody wants to drop it on the chat, go ahead, but I made the entry super easy, so anyone and everyone can take a part of attaining more equity for your for you to leverage in the markets. Let's see, gold. I haven't seen gold in a minute. I haven't seen gold in a while. Damn. You would have thought it would have went to that top. I wonder how many people just kept trying to go to the double top up there and just never let go of their trades. Let's see. We did end up coming down this low. That's really cool. I haven't been seeing gold too much. On a weekly perspective, it does seem like we want to move a little bit lower. Like, given this whole range right here, we do have room to move a little bit lower. We don't have to, but that would be ideal. So now the daily did accumulate. That does kind of make me feel like we can go a little higher, especially because we have this insufficiency here that we can move towards. So just kind of making our way back into that imbalance and potentially getting some more distribution. Okay, potentially. Right, some may think that this is a little too high, but I feel like it's very attractive given that we have liquidity to the upside. Double tops up there. This whole range here gets my attention 50% or below. Ideally, that's what I would like to see. Let's like a return back into this previous area of accumulation down here. This whole push down with this internal liquidity. I would love to see some longs out of that area. Yeah. Currently, it may accumulate and go higher, but I'd wait for the optimal entry, like the nice higher probability setup. US 30? Sure. US 30, same as the other indices, we're looking at internal liquidity here on the weekly being taken out. Dow is the one that came down to discount and it's been blasting off. Came into this previous area of distribution here. My eyes really go up to this gap up here. So where this overlap is, I would like to see us reach a little bit higher before. So for me, the range here, 50% and above is this high. or whatever liquidity we end up making throughout. So we have yet to reach premium of this current daily range. We are in premium on the weekly, but I believe we need to reach premium on the daily before we start seeing any levels of retracement. So that's really like where all the longs came from across the board, was mainly because across the board we were seeing price action just blasting off and in deep discount. Now this one, like I said, if it hits me out, it hits me out. That's totally fine. We've already trailed our stop. We'll trail our stop here if there was an imbalance, so we'll leave this one alone. But yeah, guys, so far kind of letting price action do its thing, managing my trades. That's kind of how my day goes. I mean, now we started the technical Tuesdays, right? But usually I tend not to be spend this much time on the charts. I know a lot of people spend hours and hours on the charts live trading. I spend hours and hours on the charts, don't get me wrong, but I don't spend them live trading. Mainly back testing, mainly journaling, looking at targets, setting weekly, daily objectives every single day, reanalyzing. I think 90% of my time on the charts is not trading. And then the other 10%, 5 to 10%, you could say is actual live trading. But most of the time, I'm doing a whole lot of sitting around and waiting for price action to come to my areas, managing my trades if that, and, going on about my day. Usually, like, I'll tell you this, if you sit there and watch price action tick by tick by tick, like, you're going to get faked to close out a winning trade, or you're going to do something that it's going to upset you in the long run, right? Because I don't know how many times you guys have done this, but I've done this a lot myself, and I've closed out winning trades before that went for crazy risk to reward, and I closed out with these winning trades, and it's all because I didn't learn to trust myself. So there's going to be two ways that you're going to learn to trust yourself. You either already do, or you're going to learn the hard way to trust yourself by these painful, I guess you wouldn't consider them losses, but potential gains that you left on the table, right? Unrealized profits are probably the most painful. But either way, guys, what I want you guys to learn today is just make yesterday's setback today's progress. Continue to push. Okay, yesterday's investment for me, yesterday's loss, yesterday's investment for me was today's progress, was added on to today's progress. Yesterday's investment is today's gain. So I want you guys to really take that with you. I'm going to hop off here. I haven't been playing music this whole time. Or, yeah, I have. Okay, I thought I wasn't playing music. Okay, but I'll talk to you guys here on the next one. I really wanted you guys to see how I manage my trades. I'm really glad we're getting those opportunities now. Remember, there's a new time for our market mentorship overview on Thursdays. Remember, on Thursdays, we moved that from the market mentorship to Friday's market mentorship. We're going to be doing the market mentorship at 11 a.m. Eastern, I believe. I could be totally wrong. I think it's 10 a.m. Eastern, okay? We're going to be doing our call on 10 a.m. Eastern every Friday as our market mentorship overview. That way we cover the rest of the whole week, and we don't leave out Friday, because I usually do leave out Friday, and Fridays are amazing. So with that, guys, we'll be able to cover the whole week on our market mentorship on Friday. I'll see you guys on our new time. Have an amazing week. You guys know how to reach out to me. Make sure that if you're not in the giveaway, that you guys go participate on the giveaway. Again, it's not going to take you more than a few seconds to add on your entry. I promise you. But guys, take care. Have an amazing Tuesday. Have an amazing rest of your week. And just remember, we're looking at some longs for indices. Short term. and some shorts on indices a little bit more long term, given the DXY. Now, if the DXY flies from here, this would be the area. The DXY does pump up from here. We're going to be looking for those shorts. Okay. Now, if DXY decides that, you know what, Monday was the high of the day and we're going to fall through this triple bottom, if DXY decides that, we're going to be seeing price action fly pretty high up. Again, probably seeing new highs across the board. Okay. So be careful with CPI tomorrow. Be very aware of it. It's at 8:30 a.m. Eastern. I won't be doing a stream for it. And probably won't be trading it given today, but I'll definitely be on the markets with you guys. If on Abundant Capital we have a NFP stream, I'll definitely be on that. But yeah, guys, be safe, clap easy, manage your trades accordingly, but most importantly, manage yourselves accordingly. Okay, have a trading plan, guys, but have a self plan. Have a plan for yourself, like to when the hell to step away, when to leave price action alone, when to go break even, when not to touch the trade, how long are you going to give a trade before you go close it. Like, set these parameters, because otherwise you're going to rely on emotion alone, and that's going to hurt your progress, right? It's time to turn yesterday's investment or loss into today's progress and gain. Okay, take care, guys. Clap easy. Talk to you soon. Peace.